Tell me a little bit about Venture Investment Associates.
So Venture Investment Associates is a fund of funds with a 20-year history of seeking out the best venture capital and growth equity funds. We were founded by a gentleman named Stathis Andrus, who I call the Hubble Space Telescope of venture capital. He was the director of investments at American Express Company and backed some of the pioneering venture funds in their first fund, and private equity funds as well. So he's got experience in relationships that go back probably 40 years. His son joined the business in 2002, and I joined the business in 2011 as a partner. And we've got a handful of other folks, including Cliff Gilman and Jennifer Agrayer and some folks back east. And we're a nimble and focused team.
Okay, so what is it that you do at the fund?
So I'm a managing director and portfolio manager. So I'm out looking for the best new managers, evaluating existing managers, and also wearing another set of hats. In addition to my day job, we're all out fundraising as well.
Okay, so what kinds of deals are you looking to do?
So we've got a great established portfolio, partially because we've been around for so long and have a kind of a great list of core managers. However, we love to supplement our list of core managers with kind of new and up and coming groups that are showing some promise. So we've got, in addition to the core managers, which tend to be kind of half to 2/3 of our portfolio, a bunch of new folks that we've backed in the last kind of 5, 6, 7 years that are doing something different, interesting, maybe a different geography, maybe some different strategies. One of the trends that we've been kind of on top of for a while is the micro VC trend, where groups are looking for capital efficient companies and investing in new and disruptive ways.
I mean, I think your name says it, but I just want to confirm you're only investing in venture.
So we actually, it's a little bit of a misnomer,
okay.
Because we also invest in growth capital and private
okay.
equity. So we have a bias towards lower middle market funds on the buyout side. But one thing that is kind of constant across our investing activity is a desire for our managers to be catalytic owners of businesses. So whether it's venture capitalists who are active in the development of a company's DNA and helping a company kind of grow, all the way through to kind of our lower middle market buyout managers who are kind of helping implement operational improvements and really kind of kinking upward the trajectory of the company. That catalytic ownership is one kind of hallmark of kind of what we seek in all managers.
Is there anything else you're looking for in terms of industry sectors, what you're looking for in a manager specifically?
So we tend to be industry agnostic because okay. I like to think I don't have a monopoly on wisdom. we're outsourcing that to our managers at some level. But one thing that we do look for is again, managers who can be catalytic owners, but also kind of in a more meta sense, we're looking for managers that think like principals, think as if the capital is their own capital, and really as a result are very focused on generating capital gains rather than generating passive fee income based on just having assets under management.
You had said that you look at some funds that do some things that are a little different, maybe geography or doing something interesting. Can you just give me an example of, I don't know, a geography that you're finding interesting, or just something?
Sure. So there are a couple of things. So geography perhaps is an easy one to cover. We've been an investor in the last few funds of the Drone Venture Group, and I've known those guys going back to 2005. I was actually the first institutional investor that raised his hand to do that 05 fund. And my partners had invested, I was at TIFF at the time, my partners had invested under the VIA banner as well. And Seattle's a very interesting marketplace because there's a lot of great technological talent out there and a pretty robust ecosystem, but at the same time there's not a whole lot of capital. And so the Madrona guys are doing some fantastic work. They're building some really great companies. Aptio's a fantastic company. There are a bunch of other things that are in their portfolio that are really kind of getting great traction. And Seattle's a little bit off people's radar screens. In terms of kind of functional areas, we've done a lot of work on the microcap venture side. So there's been this kind of great disruption that's a function of the kind of capital gap that grew in the kind of latter part of the last decade, where managers could really make investments in the earliest stages of companies' kind of growth and development. Almost, the other term that people throw around is super angel. And so these are firms like First Round Capital, where we were a cornerstone investor in their first fund, O'Reilly Alpha Tech Ventures, where where I was their biggest investor in Fund 1, True Ventures, where my partners were investors in the first fund, and several others that we've been kind of instrumental in pulling together. And these managers are leveraging some of the trends, and it's, when people hear microcap VC, they think consumer internet, but these trends are robust across all layers of kind of software and even now hardware. This kind of mentality of being able to build companies more cheaply by leveraging kind of existing structures and dynamics, like lower costs of bandwidth, storage, et cetera, virtualized infrastructure, open source, all that kind of stuff. You're seeing some really interesting companies being built across consumer, but also enterprise, even hardware, and even healthcare. And so that's an area that we've been pretty active in. And there's this mentality that pervades all these managers, where you can fail fast and fail cheap, so they get more shots on goal, and can really build some meaningful companies.
So how much money will you give to any one manager? Well, let me back up. How much money do you have under management?
So cumulatively, since our inception, we've raised about $1.5 billion.
Okay.
Today, we're deploying on the order of about $75 to $100 million a year, probably with about 10 managers plus or minus. So the arithmetic works out to kind of 10 million a manager. Some of our core relationships will take larger swings. Newer relationships that might just dip a toe in the water. As you know, all of these partnerships, with a 10-year life and then 5 extensions, can last twice as long as the average American marriage, right? And so, we want to make sure that we understand these general partners intimately before really committing major capital. And so sometimes that involves taking very small introductory investments.
Before you're really stuck in that marriage.
Exactly. Hey, what do they say? Marry in haste and repent in leisure.
Chris, I know that you have a blog, Super LP. Can you just talk a little bit about that? I look at it sometimes.
Well, thanks. And I should say that Super LP comes not from any aggrandized vision of myself, but rather because I once was out of shirts and I wore a red T-shirt to a meeting, and somebody comes up to me and goes, "What is that? You're like Superman underoos?" And I said, "No, it's my Super LP shirt."
That's why you're wearing it today.
And there we go. So I own nothing but red T-shirts now. So I started writing the blog actually because Josh Koppelman at First Round Capital said, this whole world of LPs is really opaque to me, and I don't understand kind of how you guys think, and so I started writing as almost like a primer for GPs to understand kind of the mind of LPs. So actually the most popular post in terms of hits that I wrote is called "In the Time of Chicken and Roulette," and it's all about how to run an annual meeting and some best practices and some worst practices. And other posts have been about how to think about fundraising in terms of sequentially. It's called fundraising trials. And so it's been fun.